Okay, good afternoon, all. Welcome back to another forecasting session. What a week it has been. Good and bad, obviously, on many fronts. But what we will do is we'll have a look and analysis in regards to exactly what's happened over the past week, why the factors have obviously played in, and what we can expect for the coming week, even though it will be very subjective. And there is still a lot of uncertainty in and around times like this, where we have geopolitical factors, wars, and catastrophes, etc., breaking out. The market does take a little bit of time to recover and recoup itself, but we can have a look at the logistics and logic behind why things have played out the way that they have this week. So, if we look at our forecast from last week, we were, in essence, sitting in an area which was being constantly tested the week before, and we had equal highs left behind. We had also areas of interest above which we were targeting in terms of supply zones, liquidity lying above us, and it did very much look like the market was rejecting to the downside, respecting the demand that was created here to then move the market up on the intermediate break of structure. Obviously, equal lows left behind here, liquidated, and then moving to the upside. We were actually looking for this supply to get taken out this past week. Obviously, very different matters have played in hand at that. But we were obviously squeezed between two areas of liquidity, which now the market has obviously taken to the downside. In essence, everything that you want to obviously bear in mind from experience is that when we do have issues like this, natural disasters, wars, and the like breaking out, then majority institutional investors and institutions themselves will then go to safe haven currencies and commodities. In respect of that, when things like this do happen, then you will see the USD will surge. It's a safe haven and staple currency that the people go to. We've also got gold going up. We've got oil going up because of obviously the issues surrounding Russia and the oil fields and the supply chain, etc. And then obviously everything else in comparison to that then does the inverse. So gold goes up, currencies go down, commodities, oil goes up. And as in essence, obviously the European currencies then go down. So that's what we've been seeing in and around the middle of this week onwards, where the market literally, after showing signs that it wanted to actually take market to the upside, actually free fell the remainder of the week, pretty much recovered Friday slightly, and is now in a consolidation. So in essence, what I see happening here is we had a distribution phase taking place here, equal highs left behind. There's still liquidity above us, plenty of it as well. And now we're currently in a phase of probably base drop. So we'll be looking to obviously come down and target areas of liquidity down here. We have got equal lows left behind on the higher time frame as well. It'll be interesting to see what this daily demand does. The 4-hour demand has been wicked with the move to the downside, rejected from that. And at the moment right now, if we go into the higher time frame, we can see that there is a whole heap of liquidity. As I said before, we have been watching this for the past 6 months or so, where we have all this liquidity sitting down here, and it could be a reason that this war is a trigger for the market to go down to lower levels. Obviously, not good in terms of what we may be seeing happening on the world stage. But the last time we were down here was COVID, which is possibly the worst disaster of our generation, if not the generation before as well. And something serious has to happen for us to get back down to these levels. And we're kind of seeing the initial steps in that taking place now. Let's hope it doesn't obviously transpire, but it could be a very good reason for the market to get back down here. And this is what market structure is probably showing us. When we go down into the lower time frame for the current period, if we see what's happened towards the end of the week, we had the big drop down. There's obviously prices covering itself very well as it comes down. However, it has left behind certain areas of liquidity where we've also broken structures to the downside as well. There's obviously areas of liquidity that's sitting up here. Great big sell orders placed here, which obviously then cause the market to go down. We've also got liquidity lying above us. So at the moment right now, we are only targeting areas that are in our periphery in terms of being sandwiched between equal highs, equal lows. The market has consolidated above a demand zone Thursday, Friday. The entire Friday Asia session and London, New York respected this demand zone down here. It has got equal lows sitting down here. So obviously something for the market to come and target to possibly then see a short-term buy to sell scenario, or it could just be a continuation of a sell by taking Asia highs up here and then selling down deeper. As we get down onto the lower time frame further, again, we can see consolidation where we're actually targeting. So equal lows, equal lows. There's obviously the 4-hour demand that was wicked down here, and the big demand sitting below us at this level, which is the daily demand. So there is reason for the market to continue down to the downside, then see what it does out of this daily demand to see whether we get a reversal to the upside slightly to pick up some liquidity that's left behind on the sell orders. That is the initial projection that we see so far. We've obviously got areas of support that's basically been put into the market here throughout Friday, where we've seen a swap zone occur, and the market has kind of obviously taken that and moved off bullish. Again, it's still not tested the levels that we wanted to see. We'll see how Asia plays out today, and then see whether we get a confirmation for sells here down into the deeper daily demand zone to then get a reversal to the upside somewhat. But again, these market conditions are very, very cautious. You need to obviously be very careful about how you trade. Things could turn on a dime, and just wait to see the market do what it needs to do on the higher time frame before getting involved in the lower time frame, because it is a very, very volatile market in certain aspects. And as I said, things could change literally within a few minutes, depending upon what comes out on the news wise. So again, trade safe. I hope you guys did well last week. It was a good week for sales. If you had held your sales from the top, a very, very good move. And if we look at the margins that people were looking at, a few of our guys actually did take 1-50s on this, and in essence, 350 pip move from the top side, which you could have very easily have been in from Tuesday onwards, and held it down to the lower levels. And even if you were targeting lows, it's still a 250 pip move that could have been taken. Fortunately, I was out of the market by Thursday morning, and I didn't actually get in on any major moves from this point onwards. Not really too hardened and depressed by it, but again, I took what I needed to do last month. I probably will not trade tomorrow, and just want to see how the market kind of recovers from this big drop down last week, see which direction it kind of takes as its bias for the week ahead, and then possibly back on the charts on Tuesday. Okay, take care. As always, please do like, subscribe and share, and if you have any questions, as you have been doing, please drop comments on the Instagram. It seems to be the most go-to point for people to actually ask questions, and also feel free to obviously send a comment on the YouTube channel. Take care. Thanks. Bye.